If you're in your 20s, you need to spam VOO or VOO. And for those of you who don't know what that is, it's basically a mutual fund that tracks the S&P 500, which is the top 500 companies in the US. Now, it's not very interesting. It's super boring, but it's safe and it's predictable. You know, you can, based on previous data and historical data, it averages about 7 to 10% every single year, which is super good to have consistently every year. I mean, think about that. Your high yield savings account at the very max is going to get you like 4 to 5%. So just by putting your money in VOO, you're going to grow that money way quicker. You know, you go from 4 to 5% to 7 to 10%. And you also got to factor in it has a dividend yield, I think, of like maybe around 1%. And if you automatically reinvest those dividends, it makes it grow even quicker, not to mention the effects of compound interest. So you really need to just be prioritizing VOO. To be honest, that's what I put all of my money in my Roth IRA. All of it's going to VOO. In my company retirement, all of it's going to Fidelity S&P 500 index fund. It's all just in the S&P. And the reason why I do this is because, you know, I know a lot of people nowadays are talking about these different types of investments where you can, you know, make way more money overnight or quadruple your money in one trade, whether it's options trading, you know, individual blue chip stocks, or even cryptocurrency. I have tried all of these different things, and I'm telling you firsthand, whether it's penny stocks too, it is not worth your time. You got to think of time is the greatest investment you can make. And time in the market is always going to be trying to time the market. All of these things is basically trying to time the market, except for a few maybe like stablecoin cryptocurrencies. It's just all trying to time the market. And at the end of the day, what's going to happen is, you know, sometimes you're going to get lucky and you're going to, you know, triple your money. But most of the times you're going to lose all of your money. And your brain psychologically is going to convince you that, you know, you're really smart and you know something that all these other people don't know whenever you triple your money. But in reality, you're going to be losing your money 99% of the time. It's just not worth the time or the effort. Whereas with VOO, it's so simple. It's so simple, straightforward. It might be boring, but it's very predictable. And that's the thing. You can't predict a lot of these other things. Options trading, very risky. You can't really predict that. Cryptocurrency, especially if you're trading altcoins or meme coins, very, very risky. They're so volatile. Even just Bitcoin and Ethereum, Solana, whatever, like these main stable coins, those are pretty volatile too, especially compared to the S&P. Penny stocks is extremely volatile. Like all of this stuff is so high risk. It's like if you're at a young age and, you know, you don't make a lot of money and you work hard for that money, why would you want to put that into something that's, you know, most likely going to just tank or that's super volatile? You want to put that into something safe and secure that you know your money's going to work for you and grow over time. You know, like me personally, I would never want to put my hard-earned money towards something that could just fucking go to zero or could drop 30% in a week, you know? I feel like that's like the dumbest thing for me to do. I want my money to consistently grow for me. Even if it's a little bit, it doesn't have to be a lot. As long as it's consistently growing for me, then that's enough, you know? Because if you do the math and you put it into a calculator, if from the age of 22, which is how old I am right now, if I just max out my Roth IRA, $7,000 a year into VOO, by the time I'm 65, if I reinvest all dividends, it's going to be well over $1 million. And at that time, you know, I get to take that money out tax-free. I get those dividend yields, those dividend payouts tax-free. I could sell some of that, put it into SCHD to pay myself an income, keep the rest in there, and it'll keep growing tax-free. That's the thing too. You don't have to take your money out your Roth when you're 65. That's just the minimum age where you're allowed to take it out tax-free. So what a lot of people will do is they'll pay themselves an income from that, keep the majority in there so it keeps growing. So it's like almost in a way like you're kind of getting infinite money if you just don't take it all out, if you keep letting it grow. Because a lot of people, you really see like the effects of compound interest after about like 30 to 40 years is when it starts to really go crazy. So you got to keep your money in there for a little bit of time, but it's completely worth it. I mean, you can easily become a millionaire if you just follow the fundamentals, invest consistently in VOO, and especially when you're at a young age, in your 20s, you know, you don't want to put your money into something super risky and volatile. You want to put it into something safe and secure, and there's nothing really more safe, secure, and predictable than VOO. So I recommend all of you guys save your money, live below your means. Any single dollar that you make that you don't need, save all that shit, put it all into VOO. Trust me, you know, you will thank yourself in the future if you just spam VOO. Just spam it, spam it, spam it, spam it.